you have to first of all find out where buyers are, and I don't mean you, Josh, and me, where we're going to be buying.
It's stacks of orders.
Yeah, it's stacks of orders. It's unfilled orders, maybe millions of shares for an individual stock, and that is only available or only created by Wall Street, by the smart money, by the pros, maybe hedge fund managers.
That's the institutional orders, the big money. We call it the smart money.
The smart money.
Now, we had another great week in the markets, a phenomenal week. Markets tickling all-time highs once again, but wow. Thursday, talk about a big down morning, especially Thursday, gapping down in the morning, which has a lot of confused investors scratching their head. Oil, we had a down week in oil, so that's been kind of showing some weakness there. And the dollar, we're coming off a supply area, which we've been talking about the last couple of weeks. Now, you talk a lot about knowledge and skills on this program about how average investors need knowledge and need to understand how to use that knowledge, which is the skill of trading and investing. Now, I got to ask our listeners one question. What would you do if you knew how the markets actually worked? And you help a lot of people understand how the markets actually function here at Online Trading Academy. What do you typically focus on about knowledge and skills, and how do you help people get started to know what's happening?
I think this week is a good example of why people need knowledge. This is sort of like the weather, hot and cold. The market, we've been having record after record after record, and then all of a sudden on Thursday when the jobless claims came out, it was a little higher than expected, which is kind of unusual since there are over 9 million job openings out there. But the problem is people cannot control what happens in the markets, and we never will be able to. But what you can control is how you respond to what's happening, how you react to it. But that requires the proper knowledge to be able to really achieve your full potential. So here's what we do. We teach people how to build a portfolio like you build a house. And what's the one thing that you have to start with when you build a house?
Starts with a blueprint.
It starts with a blueprint and a strong foundation. If you don't have a strong foundation, everything above that foundation is at risk. So the foundation that we teach is what we call core strategy. That's the investment strategy, the foundation strategy that you start with. And then from there, you add floors. You add the first floor, second floor, third floor. Those are the assets and the strategies to use, like stock, options, futures, Forex, bonds. But there are maybe one or two that are appropriate for you because everybody's a little different. Then when you get the foundation done, you have that first, second, third floor built. Then you have an open roof, which is not a good thing. You need protection, so you put that roof on. And that's the protection strategies that are part of that portfolio.
You're right. And you were talking about earlier about how you respond to the market. The great thing about the core strategy, the proprietary strategy that Online Trading Academy has, is how to anticipate those moves that are coming, how to anticipate up markets or down markets, which you're kind of responding before it actually happens with proper risk management.
Well, everybody wants to try to achieve, the greatest returns they can, the greatest success they can have in the market. And one of the ways that I think you have to be able to, or one of the things you have to be able to do to have that potential is to be able to identify where moves in price are going to take place before they take place. That's the real value of the core strategy. It helps to identify, number one, where buyers are, and number two, where sellers are. And the difference between the two is your profit. So you have to, first of all, find out where buyers are. And I don't mean you, Josh, and me, where we're going to be buying.
It's stacks of orders.
Yeah, it's stacks of orders. It's unfilled orders, maybe millions of shares for an individual stock. And that is only available or only created by Wall Street, by the smart money, by the pros, maybe hedge fund managers.
That's the institutional orders, the big money. We call it the smart money.
The smart money, exactly. And the great thing for us is the way they trade, they cannot get all of an order filled at one time. I mean, they know what the value of something is. They know what they want to pay for it, and they have the patience to wait until price comes into that area. When they start buying, they buy in a large enough quantity to move it away from that price, but they also know that if they're patient and they do it in a certain way, that the price will come back to where they want to get into something, and then they put another portion of a trade in. So the key is to be able to identify on a price chart where those orders are sitting, where they are likely to be filled, or if they're sell orders, where they're likely to be, unloaded.
Yeah, and that's well, the average investor, we're trained to say, well, I buy low, I sell high, right? That's exactly what the institutions are doing. When Al's explaining that, when they are placing, we'll say, blocks of orders, they're creating these zones or footprints, and that's
Mhm.
what we're identifying on a price chart. So when they're buying low, they want to sell high. They are not going to chase price, which the average investor does.
Right.
They're going to wait until price comes back to where it's low again at a wholesale price.
Yeah.
And that's what the strategy that Online Trading Academy has is designed to do. It's designed to teach you to find those orders where those institutions are buying and selling because they move the market.
Yeah.
The great thing you mentioned earlier too is we can't control the market. We can't control what's happening. What we can control is how we respond. And we do want to be able to respond or anticipate these moves coming into the markets. That way we can make better investing decisions, basically buying low and selling high.